Are they going to give us this trade, JP?
They're trying.
So the trade in question is a move back into, we're holding inside of yesterday's range. We've yet to exceed the initial balance range, the first hour. So the trade in question is if they could break through this, looking for them to move back towards 77, this area right in here. That's the trade we're looking for. See if we get it. Right now, the auction just keeps trying to get inside of the prior day's range. You can see here, we dip in and we pull out. We dip in, we pull out. We dip in. So they need to be able to, accept back inside the prior day's range. That'll increase the power of the magnet back towards the 70-67 area, and we'll make that a intriguing potential opportunity. But we'll see. We'll see. I've got, let's see, what was that, 71.25. See if I can make a new 30-minute low here. Well, while we're waiting on that, let's get started, shall we? Let me find my slides here. Okay, welcome to our Friday Q&A session. Glad to have you with us. As a reminder, this week's in particular, when you see some of these products moving in 5-minute ranges faster than they've moved in an entire day a couple months ago, you know that risk is present and it is there. Not yesterday, but Wednesday. If you had been wrong for the NASDAQ the entire day on one contract, you would have lost over $7,000. So trading futures, trading any trading product involves risk. Be mindful of that in your plan. This is me. I'm Josh Schuler. I'm the founder of Trade Profile. The key turning point in my story, I started in retail trade and eventually went to the institutional side and have kind of been serving in that domain for a couple of years now. But really the turning for my trading was when I got exposed to the profile in 2012, and have continued to see that as a way to help us see what other participants can't and help us make better trading decisions. And with me is JP. He's another one of our trading coaches, brings some experience in the professional realm of golf, as well as trading on a number of desks, whether physical commodities or futures. And today's discussion has to do with this question. It's like, should you go with a move or not? Right. So markets move. We can see the move. Should you go with it or not? And this has been the focus of our development pathway. So each week, traders who are part of our community go through one of 16 modules as we work through a path of building toward trading skill and consistency using the profile and auction theory as the base of our process. And this week we've been talking about acceptance and rejection, which as concepts really go after this challenge. So the challenge is that you see prices moving directionally, and then the question is, should I go with it or not? Right? If I did, how would I know that I was right, and how would I know that I was wrong? This is the question. And if you don't understand how to discern whether the answer to that question, this is the risk, is that if you can't recognize acceptance or rejection of price, then you're going to get trapped with poor trade location, right? We've all seen this. It's a rite of passage of trading, is that you end up buying the high, or you end up selling the low, and then you're in max pain. So this concept of acceptance and rejection, which we've been working through this week with our community, is really around this question of should you go with the move or not. And we're actually looking at a market right here that we know a move is coming. We know a move is coming because it is in balance right now. We're balanced, and we're accepting prices higher than yesterday, but we're looking to see if a move comes. And if the move comes, the question is, like, how would I know if I should go with it? And the first is that idea of acceptance. So acceptance is just saying that I'm getting two-sided trade at a specific price. So you can see clearly today there's a range of prices that the NASDAQ has been trading where it's accepting these prices. It's accepting these prices, and you can see that the profile is building out on the composite as we're adding inventory at those levels. We tried to trade higher here, which could have taken us up to our next decision level up here at 72.20, and those prices were rejected, right? So you can see the base started here, and then in two subsequent periods, we're back to that. They rejected those higher prices. So that is the idea. The short answer, without being too specific on should you go with the move or not, is like once you see a move begin, the question is, can I see additional participation in that direction? Like this long here, which had good buying volume, and saw some buyers on this side. The initial question I want to see is, can the base of that move be defended? And can we, in subsequent periods, build out? So it looked like we were accepting prices higher, which would suggest we would move higher. And they really just failed to do that, return through that base. So that was rejecting those prices. When that happens, then the prudent thing to do is to exit the trade, because you are most likely wrong. I think we're going to get the run here, JP.
Yeah, it looks like they're going to want to test some prices down below. The order flow is at least saying that.
Yeah, we're definitely, we were positive. Now we're almost back to neutral here. So they're definitely adding to the sell side to balance this thing out. Another way that we see acceptance is, can you get additional, rejection and acceptance? Can you get additional participation? You can see these lower prices. How many contracts are traded up here versus how many contracts are traded down here? We've thus far accepted these lower prices. If the auction's going to move lower, we're going to have to continue to build out at lower prices. And thus far, they've been unsuccessful, although we do have a lower low here in heat period.
It run down to that 7,100 there, which happened to coincide with yesterday's value area high. So
yep, that's kind of the first target.
Yep. And then if it gets slippery from there, then 70.50 on that deal. But my guess is that it's Friday, about 20 minutes before the Eastern time lunch. They've had a couple hard days this week, so I'm not sure if they're willing to push this thing too far. So.
All right, we're waiting to see if they can break this sucker.
While we're waiting, does anybody have any questions?
And we're looking for, what do you say, 7,100?
Yeah. If they pause it, that'll be a pause there.
Yeah. There's an area of rejection here in the Globex trade.
Yeah.
That is a place that we could watch them slice through it. Now, what's interesting, and Ray pointed this out, one of our community members pointed out, there's a spot here, there's a single print in Globex, some really poor structure there that could potentially be a target if they run at it. But to Judge JP's point, it's like we can't get some mojo here. We're running out of time. I think everybody's exhausted this week.
We haven't had volatility like this in a while. So when Josh says exhausted, it really, mentally, on a week like this, when you're seeing 5-minute candles run, 40, 50 points, that's that'll get your attention real quick.
Yeah. And if this is not on your radar already, sometimes we assume that these things are known, but if you don't have a chart of the VIX that you're kind of watching, to kind of see where things are, that needs to be part of your arsenal. especially if you trade the NASDAQ, the VXN is the product. If you trade, let's see, the RVX is the Russell volatility. OVX is crude oil volatility. You can see that after a couple of days of moving, the volatility in crude's dropped. The VIX is for the S&Ps. So you can see we actually had a move higher in the VIX that has now rejected. So these big tails like this is a way that we also see price rejection. Moves always begin from an area of acceptance, and then there we go. There's the push. Go, 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 go. Go, 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 go. Come on.
Most likely they'll run it down that 7,100.
Yeah, you can see all the sellers stepping in here.
Yeah.
So they're gonna push this thing. We're finding sellers at these lower prices is good.
They're running stops right now, so that's enough to probably give them the energy down. At least I'm hoping so.
Oh, that's awesome.
Yeah.
So this is exactly the point. So here's a move. Should you go with it or not? And think through what you would need to see to have confidence in continuing in that direction. So for me, one of the things I want to see, especially on a histogram like this, is at these lower prices, I want to see, more build out of volume at price as an indication of, further acceptance of these lower prices. Otherwise, this person who's pushing down here can be putting their neck out and then be lost. Give it a second for this to catch up. Yeah, here you can see it's trying to fill back in. So like somebody down here did 8 contracts. that was the bottom. So there was exhaustion here. So this person down here, if we get some more participants, they're going to be sweating. Yeah, see here now we're going to build out some more contracts down here. Yeah. Nice. Nice. This was worth waiting for. This is the one.
Yep, here it comes.
So ultimate target on this trade is back to yesterday's point of control, which was prominent and significant here at 70.64. My entry was on the break right here.
Yep. Mine as well. All right, come on, boys, just push it down.
Yeah, so while we're watching this, great question. I mean, so, trying to understand this acceptance. Acceptance is, so if we think of all auctions as behavioral, we're looking for other people. We don't want to be caught up by ourselves, right? So when you first see a move like this, you want to see additional participants that are trading with you. And there's a number of ways that you can look at that. One of the ways that we talk about with our community was, in a subsequent period, can I gain acceptance, or can we keep trading those prices in a subsequent period? So like in the next 5-minute period, in a minute from now, can I still be trading these prices? In 30 minutes, can I still be trading those prices? Those are all part of All right, now we're back.
There you go. I was like, where'd he go?
World.
By the way, there's 7,100 and beyond. Josh, you hear me okay?
I can hear you. Yeah, I've been having, I think my connection died here. Hang on a second. I've been having data issues today. Actually, earlier this morning, had a, yeah, here we go. Had a problem where I was short with size, and the data froze, and I couldn't see it. Yeah, they're going to get right back here to the 65 area. That's awesome. Just awesome. It's also why you need to have redundant data. So, the question of, further acceptance. So one of the ways that we're seeing acceptance is like, as we're going to these lower prices, I can see additional contract volume at pretty consistent, they're doing 100 lots, so there's 700 down here. Like there's no exhaustion. It's not tailing off just yet as we get lower. However, I mean, there is a spike here. So I want to continue to see, additional periods in this area where I'm building out more volume at price. That's a way of showing that the auction is accepting. Also, like if the point of control throughout the session would migrate, that could show acceptance. So you can think like right now, what would have to happen for the point of control up here to migrate lower, right? Like we would have to spend additional periods down here and build this thing out long enough that the contract concentration went this way. So that doesn't mean that it's wrong to be short here. I mean, obviously we're short, but the question is, what has to happen behaviorally to continue to stay short? What types of things? And this is actually, we talk about 4 questions that let me refresh this, that you need to ask before you put on a trade. And one of those is, what behavior would I need to see once I'm in the trade that would confirm that I was making the right decision? Yeah, so see, now you can see a little better. So see how there's some volume concentration down here? Like that's good. And there's also, we accepted and built out, there was an area of concentration of volume here. Now there's concentration lower, so they were accepting lower prices. They were putting some size down here. For them to continue to move lower, I want to see additional, build out of volume to hold these lower prices. Otherwise, price will do what price does. It's going to go, you're essentially trading below value, so it can revert back to value if value can't shift with it.
Hey, Joel, on the acceptance thing, also, you just understand the language. There's lots of different language that goes out there: acceptance, consolidation, going sideways, all that kind of stuff really means the same thing. But we acceptance is what it is. It's prices being accepted in a specific area that rotates back and forth.
Mm-hmm.
Okay, and then from there we break. Josh, you have your whiteboard you could pull up?
Yep.
So while Josh is pulling the whiteboard up, so understand how price movement works. Price movement works. It starts from an area of acceptance. You can just run, some back and forth stuff. And then from there, it auctions away from acceptance. Sometimes people call that an inside out move. It moves from the inside of acceptance and out, and it auctions away from that acceptance. And then it's looking for one of 2 things. It's looking for an area of acceptance to start again, okay, just like Josh is illustrating there, or it's rejection, okay. So if you go back and now it gets rejected, it would go, and then typically it goes back to an area where it did business before, which would be the acceptance area. And that's the two schools of thought. Well, it's not the school of thought. It's actually that's the way markets work. And once you understand that simple concept of acceptance and auction and rejection, then you can build your trade plans around that. And in this case, we had acceptance this morning. You can see it very clearly on Josh's charts. And we went sideways. We just, people call it choppy consolidation. Again, you can use whatever term you like, okay? And then it finally broke away from that acceptance area. Now the question always begs, what's the level what's the level that's the break, okay? Well, I mean, you could say, okay, the lows of the morning at 71.18 would have been the area of the break, but you can also watch order flow. It just depends on the extent of your knowledge and stuff, and the how much how much skill you have inside that area. I typically wait to the low there to get taken out at 18. If you want to jump the gun, you start to see order flow coming in. That's up to you, and it depends on your time frame too. So, and this works on all time frames. So whether you're a really short-term trader or you are a longer swing trader, maybe on a 60-minute basis, these all work the same. So hopefully that helps a little bit more.
Yeah. Now, in terms of stops on this trade, so I mean, there are a couple different ways that you look at, is either returning back into that opening range, or you can look from where the base of the move started, and you can see that the big volume came on this spike right here. So that's probably a little bit better spike or better stop area. And then if we continue to move lower, then you could move stops here. For those of us that are trading multiple contracts, we've been peeling them off as we move lower. So I've got, I'm just going to keep them here at the moment for remaining.
Yeah, and I'm expecting a test back to the breakout area. They call that the kiss, where sometimes goes back and kisses where it broke out. It's very typical. Anybody else have any other questions? It doesn't have to be on acceptance or rejection or anything like that.
We can start with that. Yeah, that's right. We just start with that because that's what we were talking about this week.
Joel, that's I can't. Okay, so you have two things here. So should we hold a double distribution to confirm the downside? My order was below the balance area, and now it looks like it's pulling back. Where should my stops be? Okay, so let me answer your first question. Well, let me get to your other one because it's an active thing. Well, you got to put, I don't know how many contracts you're trading, and my, honestly, I'm not sure where, you're comfortable putting your stops, but if you're trading multiple contracts, you should have already peeled some off. I say break even is probably at the best at this, or the worst that you should be doing. In other words, where your entry is. You should have that in your plan at this point. And if you're not sure where those stops are, I'd probably liquidate my position at this point in time and make sure you understand how you put your stops. That's the key to trading. I can't tell you, I can't stress that enough, is that you have to when you're in the trade, you have to understand where you're going to move things. Okay. It's like a chess game. Okay. Like before this thing broke out, you heard us talk about 7,100. Well, there's one of our targets right there, 7,100. And then from there, in my mind, it's okay. Once I've got that 7,100, where does my stop go? Well, my stop goes down to where my entry is. If they take me out, fine, that's great. I still make money. Now now that we've got some choppiness down here and maybe a little bit more acceptance below this area, or we're starting to, then I may ratchet down my stop to lock in more profits at that point. So you really need to determine that based on, for one, your style, your trade account size, your trade plan. So it's not a matter of what we think, because we all have different, I don't say we have different trade plans, but we have different thoughts on where our stops go. And then should we hold a double? So we should hold a double distribution to confirm the downside. Well, yeah, not necessarily a double distribution. This thing could roll out of bed and just keep sliding. There's no double distribution there at all. What we need to do is hold it below the actual acceptance area. If we roll back in the acceptance area, that was just a head fake at that point. And then we could probably chop around a little bit more the rest of the day, or they may even go back and test the upper side of that range then.
Yeah, I just echo, JP talking about, having that predetermining your trade plan. So there are 4 questions that when we talk to traders about putting on before you put on a trade. So, and then this is about as dogmatic as I get. If there's before you ever put on a trade, you should have 4 things defined. First, you start with the opportunity. So like what is it that you're expecting, or you build a narrative around, you think the auction is going to do? that is intriguing about taking that position. That's first. Second is, okay, for whatever that opportunity is, I'm stopped, by the way. Whatever the opportunity is, what is the risk that you're willing to put on the table to get that opportunity? You know, how much risk are you know? And me personally, I try to always measure that in at least a 2-to-1, most likely, most often a 3-to-1 reward to risk ratio. Then the third question is, what would tell me, like once in the trade, what would tell me that I'm right? Like what if I'm trying to pre-visualize what would happen that would tell me that I'm right, and then what would tell me that I'm wrong and say, "Whoo, I need to exit the trade." I can't tell you how many traders that I've worked with who they're like 80, they can build a trade setup that's 80% accurate and they still lose money. And the reason they still lose money is because they're actually so proficient at finding entries, but they haven't thought through how they'll exit before they got the entry on. And so then the trade goes against them, and they just the brain starts doing all kinds of wonky things to keep you in the trade because you don't want to believe that you're wrong, and then you'll end up, you know, rolling over or giving back a whole week's profit or blowing up your account, you know, or worse. So let me commend you to get into a consistent practice of building the trade idea, starting with the opportunity first, and then saying, okay, well, how much am I willing to put on the table for that opportunity? Okay, so if I got in that trade, what would need to happen for me to stay in it? And if I got out of it, or, you know, or what would happen that would tell me I need to get out of it? So like this trade opportunity right here, I mean, we were looking for the 7,100. I mean, really the ultimate target I was looking for is 70.66. That was the ultimate target. So, you know, entering, you know, for me, as I built the trade, when we broke here, my initial risk was 71.46 because I'm looking for 70.66. So you can see the ratio of risk to reward. Okay. Then once we got in it, what behavior would I want to see? I wanted to see this. I wanted to see building out of additional volume in the direction that I wanted to go. What would tell me that I was wrong? Well, if we couldn't do this, or we immediately snapped back to the point of the breakdown, then we were rejecting those lower prices and I needed to exit the trade. So that's all, you know, pre-processed in my brain before the trade is ever put on. You know, it started, and I mean, you'll know if you were, you know, part of our pathway, you know, I was talking about the 70.63 at 6 o'clock this morning. So this has been on the radar for a while. Yeah, and you know, as JP was talking about, we were peeling off on the way toward it. We had kind of this initial target, and then, you know, this 5-minute period here, or I'm sorry, this little pullback right here, you know, I had to stop, and you can see they stopped me out. So I'm flat, and if it goes to the target, that's great. That'll confirm, you know, the idea. Otherwise, I'm just done for the day. But yeah, you want to be a better trader tomorrow. I mean, absolutely guarantee you be a better trader tomorrow. Use those 4 questions when you're constructing your trade ideas.
Yeah, absolutely. Any other questions, guys?
Great question, man. Thanks.
Yeah.
Thanks for.
So here, let me just run out. Okay, so what they did do is they went ahead and they went back and they kissed the break. I mean, almost to the tick, didn't they? What is the low on that? Low is 71.18. They actually went up to 71.17 3/4. Okay, so they went back and kissed the breakout. Now look at them. They're trying to go down and take out that low there of 85. Now you're going to probably ask, well, you got stopped out. Well, you know, you could have been in this trade still. Yeah, we could have been, and it could have also ran right through us and took out the highs of the day too. So
that's right.
I mean, we just never know what's going to happen. So the idea is to preserve capital. Okay, yep. So we know that not every trade is going to go ahead and roll over and and be a monster winner. That's just not the way it works, unfortunately, especially today when we have such a small range going after I mean, look at where we've come from the last few days, and look at the different ranges. Traders get tired. Actually, algorithms get tired. So they turn them off sometimes, and traders decide, hey, it's been a big week, so I'm not going to do anything more. That's one of the cases here. Now, will we still possibly sell off? Yeah, possibly. Okay, but it's not about catching every ebb and flow of the market. If you think that's what trading's about, you got to go back and reevaluate a little bit. You can't catch every ebb and flow. For one, it'll waste you mentally, and then two, it'll also waste your capital because they will get you in the end. So, but in this case, it looks like they're going to try to accept a little bit lower than what we just had. There could be who was it that said that? Was that Joel said double distribution? Yeah, it could be happening right now. Very well. A very good call on that. All right. Anything outside of the rejection or the acceptance side? Anybody have any questions, outside of that or anything else? And you guys are easy. And I've actually got my oldest son sitting right next to me. We're just watching this, talking about the actual acceptance, because that's one of his. He does an inside out trade, so we look for that all the time.
Got a zone down here at 70.30.
Yep.
We're still inside yesterday's range in crude, but I got the zone down here at 70.30. I'm interested in because one of the things that's happening in crude is that you can see, if I go back for the past week, that all of the value, or most of the volume is here. They tried to build out a little bit here at 71.26, but I'm actually looking for crude to come down here and then test and rotate back up. Probably not going to happen today. Most likely going to be maybe next week. But there's a zone. If I merge these, you'll see this. This is where this level comes from. You can see that was the most traded price of those sessions. It's right there. So I'm expecting the auction to pause as it comes into that area. That's not what I want to do. Yeah. So recap just real quick. We've been talking about, once you see a move, how do you have confidence that it's going in the direction that you want it to go? We use the terms acceptance and rejection. This is one of the ways that we see acceptance, is you see additional prints in 30-minute periods in the direction that you are looking for the auction to go. So that's just beautiful. I bet they're going to get those singles down here.
Yeah, I think so. Hey, Tony, also, this is being recorded, so you'll have this as well. You'll be able to hear in detail what that is, all the questions and answers and stuff. Yeah, I've got, at this point, I'm looking at 70.50. Now I don't have any trade on at this point, but 70.50. So who was it? Okay, Joel. So if you depending on where you entered the trade, if you kept your stop a little bit higher, you could be in this one. It just depends. Again, going back to what we discussed earlier, it depends on your situation, your trade capital, the 4 questions that Josh alluded to, all that kind of stuff. So
I can tell you that if I was still in this trade, my stop would be above the spike right here.
71.18.
No, 71.7.
Yeah, 7.
Yep. Right above the base of the.
Oh, okay, I gotcha. Yep. I would definitely be locking it in myself personally. So, yeah. I mean, that's a pretty decent break and a pretty decent trade on an intraday basis.
Yep.
I mean, if you listen, again, guys, be realistic about certain things. Yes, we've had some monster moves the last few days, but at the same time, It's Friday. Traders aren't willing to push unless we have an event in the world. They're not going to be just moving this thing around a lot. Typically, especially it's 12 o'clock Eastern time, so it's lunchtime. Traders are bailing out. So I wouldn't expect this thing to roll over and go 200 points to the downside.
Yeah.
I mean, could, but I wouldn't expect it. And in my trade plan, it says after 12 Eastern time, there is no more trades for me. So
we've been talking, obviously this week there has been quite a lot of volatility, and I do want to point you one place on our site. If you go to the blog, so tradeprofile.com/blog, and then you can click on webinars, and you can see we're posting these. But there's one that we did this past spring, which is how to use the profile to adapt to volatility. And go back and watch this. It was a good session we actually did with Tom and Corvia at Blue Tree Strategies, and just looking at how do you adjust your trade plan to more volatile times, so that you're right sizing the trade, and the profile works regardless, but the ranges are still significant. To get, even in the break that we got to the first target, that was 20 points. That's $400 a contract on the NQ. That's that's not bad on a one lot, right? So do we look at the value area? Like the reference, the value area high, value area low, and so forth? Okay. Somewhat. JP, do you have a?
Yeah, on a daily basis, no. On a weekly basis, yes, for targets only. I don't use it as a trade. So I use, I will look at it for, if I'm, looking for a target and not specifically that target. And here's why. I'm more interested actually in higher volume areas and stuff like that, because that's where business has been done. Most people, aren't looking at high or value area highs and value area lows. They're not looking at where business that area. They're looking at the volume inside that area rather than the number of high and low.
Right.
However, if I'm looking to peel some off, I may look at the value area high and low on a weekly basis, on a weekly profile, as opportunity. But typically, no, I don't look at a value area.
I know. Peter Rezicek talks a lot about value area high and value area low. Like shadow trader guys, and and he'll talk about that with Dalton. Here's my this is my perspective, having used the profile now for 6 years, is that if I had to choose between building my trade ideas around, as JP said, the concentration of volume, not a value area on a session, I'd be far more successful, and just chuck any care about value area high or value area low. Because this actually came out of a conversation with Terry Lieberman at Window Trader. He's like when you look at the value area is 70% of the trade. Well, look at the value area from yesterday. That's a massive range. That's a massive range of prices. So it's just not real effective. However, if I look at where the concentration of volume is, I get far better areas of focus than at looking at just something like a broad value area. Now, also to JP's point where he talks about looking at value across multiple sessions. Now that is something that I do look at, and like if we go over here to long-term chart,
while you're doing that, I'll tell you this week's value, this current week that we're establishing, the value area low, currently on the weekly basis is, it's at 7,100. Go figure, right? Mm-hmm. And we were looking at 7,100. I was looking at 7,100 and thinking, okay, well that coincides with a value, another area that we were looking at. So there you go. We have two areas of confluence. That's of interest to me. I'll peel some off at that area. We could find somebody stepping in at that area.
Yep. So
And it's
go ahead.
No, I just say it's just not it's not an exact science, and trading's not exact. If you're going to take an exact, so if you're going to say, okay, I'm going to put an order in at 7,600, and I'm just taking an arbitrary number, and I'm gonna put a sell order in there, right? We don't. If you expect that thing to stop on a dime and turn, that's just not going to happen. I don't care what market you're trading, it just isn't going to happen. I mean, they could blow it through 30, 40 points, then turn it around. They could stop 5 points before 7,600. We just don't know, and therefore, that's why, again, Josh alluded to the 4 things that you need to know before you get into a trade. And that helps you. Now you can use a specific number. We actually like to use areas. It works a lot better because then we look for triggers inside those areas to help us out. And therefore we can establish risk off of those areas, or off that trigger, if you will. And then that helps us out. Now, if we say I'm watching 7,600, yeah, I'm watching it. I'll watch that area. I'm not going to watch that specific number. I hope that makes sense. So don't get too tied down to a number. Like at this case, the value area low for the week at 7,100. That's one specific number. I'm going to look at a few variables around that number and say, okay, yeah, that could be a target for me, especially if it coincides with a higher volume node. That's perfect in my world. Did we lose you again, Josh?
Nope, I'm here. I was just clicking on something. Looking at, oh man, I must have did something I didn't like. Let's go here. Actually, I can do it here. I like backups. I like backups. So this is a daily chart, and you can see that we're coming into an area. Get a little bit more prominent. An area from before, where the auction had found a bottom and then ended the auction this way. There's some rejection down here. There's some rejection up here. So it's building a range and you can see during this period, the auction was just trading back and forth. And so you could put a profile across that and start to see prior areas. In fact, most of my decision levels lower came from going back here to this period of time. So this is like a value area. We call it a bracket of price. And so then when you can identify that you're in a bracket of price like that, you do watch what happens at the extremes. Okay, so like here was a potential poke above that was rejected. When that happens, then the expectation is, as the trade did, it kind of goes back towards the middle. Tries to go lower. Here's a test lower, it rejects it, until it gets acceptance outside of that. Then that bracket holds. There was another one. You can look right here. Look where the big break occurred. Right at the bottom of that multi-session. So while I don't look at value area on a specific period, I do look at what value is doing across multiple sessions. That does offer some insight. Great question.
All right, what other questions we got here? I know you guys got something.
Let's see what the rest of the indexes are doing here.
Um,
Russell making new weekly lows, baby.
yeah, they're getting ready to take out yesterday's. Yeah, they're going to take out yesterday's low here in a second.
The level that I'm watching in the Russell, 1532, that would erase the year.
That's amazing, isn't it?
That is amazing.
Wow. Ooh.
I love, people say, well, why did we stop selling where we stopped yesterday? Look at that. Look at that node of inventory, and that's where InQ stopped selling. That's just beautiful.
It is, and okay. So again, just to be real clear and just to understand that this is not, we're not talking voodoo stuff here, guys. What this is a way of, Josh, and you had the language, and I can't remember the language, so help me out here if I butcher it. Market profile or profiling is a way of reorganizing price and volume, and that's all it is. In the old days, we'd have candlesticks at the bottom of the chart showing volume, which wouldn't tell you much of anything. Okay, it wouldn't tell you where, if price was falling out of bed, where it could possibly stop. Okay, or where an area of interest would be for us, right? And so that's why we use this. And just as Josh alluded to on the Russell there, where price, stopped. Okay, was that an accident? No, that was not an accident at all. That was, that, I wouldn't say it to be expected, but we would be, if we were short that, we'd be definitely watching that area to take some off or maybe cover our position or something along those lines. Now it's got to work a little bit to get through that stuff, because again, there's the people, there's business been done. If you go to the right of the chart, you see the high volume. You go to the left of the chart, you can see the overlapping days. And if you go back over there, Josh can point it out there. You can see the overlapping days there that creates all that volume there. So they have a lot. If the Russell wants to take out the lows of the year and negate them and keep going lower, they have to eat through all that inventory. So they're going to have to make a bounce and reload somewhere, or go sideways a little bit. So they're going to have to build that energy back up, and then either what they call back and fill, which is another form of acceptance, and then, or they're going to have to go, accept, create the acceptance right there in that area, and go sideways for a little while, and then take an attempt at those lows down there if they plan on doing it. And then the question is, when you say they, who are they? Well, those are the big wirehouses, the guys who have monster inventories of that can make markets move. The only markets that Josh and I can make, or should I say Josh, can be live cattle. So
feeder cattle.
Feeder cattle. That's Josh. Josh can make that market move by himself.
Oats.
Yeah, oats. Oh yeah, I've done that before myself. So
I got a friend of mine. He's like, I was the third biggest trader in the oat pit.
Yeah, well, he was in the oat pit, but I was behind the screen, and we were the second largest, and also the number one physical. So
that's awesome.
Yeah, it's a great market. It's like watching weeds grow is what it is. That's how exciting that market is. You want to know, sitting around waiting for paint to dry, that the oat market is definitely it. So there ain't a lot going on in that market.
No. Just kind of scanning here just to see what else is doing what. Kind of going through my quick sheet here just to see.
Mm-hmm. No other questions, guys? Pretty quiet this morning.
Here's a you can see, gold coming back into several weeks prior acceptance, and it just pauses here. It doesn't mean that gold's done going higher, but this is the expected behavior when you come into a prior area of acceptance, is that the auction will slow, especially the more time frame convergence across that, the more likely it is to slow the auction and pause for a second.
Yeah, so gold is So gold is great. I love gold. I love gold trading. So gold is great. For one, she's, she's been a little finicky lately. But so anyway, we have the high volume node out at 1206 to the right there. Okay, so we've been accepting those prices for a while. Okay, that's a great example of acceptance right here. Now we've broken above those acceptance. We ran back into another smaller high volume node. Now here's what I look at it this way. If we're going to see another move up, if they're going to auction this thing up further to the upside, I want to see that 1206 held.
Mm-hmm.
If we break it back down, then that would be considered a false breakout.
Mm-hmm.
Okay, so when I tell you that, oh, I don't look at specific numbers, I sort of do. I mean, in this case, I want to see that held. Does that mean that if it doesn't hold that we're done to the upside? No, it doesn't. But what it does is that's sort of a reference point for me at this time. Will I trade that 1206? Absolutely not. Now, if I'm long this market, which I'm currently not, then I may use that as a reference is the get out of the trade. It's called a GFO, right? You can use, that's the acronym, use your imagination. So that may be a reference point for me to say, okay, if price gets below there, I do not need to be long at this point. Let's see here. If you look at yesterday's low to the overnight high in the S&P, we are halfway back right now. Okay, yeah. Unfortunately, Joel, I don't use halfway backs or anything. I mean, if they're good reference numbers, we've discussed these inside the channel, pretty much ad nauseum, but I don't use them. So.
The effective, I know Jimmy D talks about halfway back a lot, and here's where halfway back is really effective is the day after a trend day. So if I have a trend day in the auction, and one of the things I'm trying to discern is like what would tell me that the trend has been negated. So like let's go back to this big move down here in ES. Is I will, as part of my plan, I'll look at that that move and go, okay, so 2385 is a 50% retrace of a trend day. And from a swing basis, like if I was had a much longer swing, I mean I'd say that the sellers are still in control of this auction initially. So if I came in yesterday, I would have said, hey, 2836 is my bias level. I would be looking to fade anything that got up to that, and if we traded through that level right there, then that would negate the trend. When we came up and then made new lows, then I would have moved that level to here. So now kind of 2800 is the upside control level in my mind and my plan for the S&Ps. And given we have a little bit of buying excess from yesterday, but you can see here on the profile, they're building out and accepting these lower prices. So we're likely not done going lower yet. There's not a lot of exhaustion yet to the downside.
Yeah, and that's a great point on the swing basis too. Joel, here's what I'll tell you, and I'll tell everybody: the more simple you make this, the more profitable you're going to be. Mm-hmm. The less things you're going to look at. Let's just put it that way. Again, going back to what Josh and I talked about on the whiteboard, understand what markets do. When you understand what a market does, then you can formulate your plan around that. And when you formulate your plan around that, you're going to realize you don't need a lot. Okay. Yep. You can add some things to enhance it. Like, okay, I mean, because really, do you need 50, now 50% retracement, if that coincides with like high volume nodes, yeah, that area is of interest, for sure. Definitely. The more things that you have stacked up in there, I think the better off you are. Again, the reason we look at volume and numbers or price is just because a lot of people look at price and volume. Everybody looks at price.
Yeah, that's the indicator that everyone looks at.
Yeah, I mean, unless you're an algorithm trader and on the equities markets, those guys look at no price at all. I mean, they're just writing crazy algorithms, right? Mm-hmm. So anyway, so make it as simple as you possibly can. It'll save you a lot of heartache and make your life easier too.
Awesome. Well, we're gonna land the plane here. Thanks for spending some time with us this Friday. Get some good rest. Hoping that we can continue to sustain some of this volatility for a while yet. Real quick, I'll just tell you, this is just kind of a tip from me. So, I look at the VXN, which is the volatility for the NASDAQ. I find that when the VXN is above 15, you can see we're trading 26.32 right now. I find really nice two-sided trade. I also know that I need to watch. I typically size down in periods like that because I know we're going to get larger ranges. So, man, as long as we stay north of 15, we could have just some awesome trading the rest of the year for the actual VIX on the S&Ps. Really, anything above 12 on the actual VIX for the S&Ps offers some pretty good moves. So,
yeah, I would definitely agree. And
kick it off there, Jed.
Sorry about that. So anyway, sort of what so I'm done today for the week. There's no more. But what I will be looking at coming into next week, just as sort of a tip, is that I will look, first of all, we are selling off now. So we're probably going to end up hitting 70.50 before the end of the day. That will put us back into the range, middle of the range, which would tell me that would say, okay, they're not ready to roll this thing to the upside. So I'm going to come in on Globex, which is Sunday night, and I'm going to just watch a little bit. There's no trading for me on a Globex session on a Sunday night, or typically any Globex session, unless we have major problems or economic news. So I will look at that and look at the VIX. Josh showed the VIX. VIX is rising right now as we go through the day. So that's telling you, that's a story as itself. So as Josh had said, that we probably have more downside in the future here. So I'm going to take that into consideration, considering the Russell did make new weekly lows here. So I take that all into consideration. I come in with a bias on Monday morning, and then I'll trade my plan accordingly.
Excellent. Well, that's it for this Friday. We'll be back next Friday with another session. If you've not yet gone through our free course, which really just talks about how do you think through an auction, make sure you're getting that. Or if this is all Greek and new to you, and it just looks like the Matrix or something like Mandarin Chinese characters, I suggest our intro video course, Build a Profile. If you see some rationale and some reason in the profile, and you're like, hey, I believe in this whole auction thing, but I'm just not really sure how to actualize that and to generate trade ideas. Take a 7-day trial with our development pathway. We're going to give you a trade setup that you can look for every day, and then build on that understanding and walk alongside you to try to work on building your own trade plan to get you that place of consistency. Interact with us on Twitter. We're posting daily decision levels there, also on Facebook. And then you can always reach out to us at team@tradewithprofile.com or give us a call. That's it. We're here to help traders learn to profile, make better trade decisions, and take more profits. We'll see you all next week. Be on the lookout for the recording posted to our website and sent out via link, the email sometime this weekend.
Yep. Thanks, guys. Have a great weekend.